Good morning. It's Monday, August 5th, about 6 a.m. Central Time. Overnight, there's panic in the markets, and it's spilling over into the precious metals markets. You've got December gold down $25 at 24.45. September silver down $1.25 at 27.16. You even have platinum down $40. Copper down 13 cents, and this was really a historic sell-off in Asia overnight, with the Nikkei down 12%, and the contagion spread to nearly all markets as a tech-led sell-off accelerates. The Nasdaq 100 is set for its largest opening drop in more than 4 years, and speculation continues to grow as to when the Federal Reserve will cut interest rates. Traders are ramping up their bets that the Fed will make an emergency rate cut within a week, and the odds of that sitting at about 60%. So the economic data has really slowed, as indicated in the labor market. That's what we saw on Friday, and investors are panicking that the Fed is behind the curve. They're not cutting rates at this 25 basis point increment, which a lot of people were speculating they would do in July. Probably the right move in hindsight. So looking at some other things here, you've got Bitcoin down $11,000 at 51,000. You do have crude oil futures, even with all those geopolitical events that are going on in the Middle East, down $1.20. The agricultural market's getting small benefit from that weaker dollar. Could spark some of the exports that it's needed so much here recently. And then, of course, you have the Japanese yen, where the Bank of Japan had raised rates, so it caused this unwind of these inflation hedges. Remember, people were selling yen, buying dollars, and buying mega cap growth. Now that trade is being completely unwound, and you see the Japanese yen here up massively overnight. So that is also another safe haven type of asset. Now, looking at things like the CME's Fed Watch tool, you go to that next meeting, that September meeting, they've got it at a 98% chance of a 50 basis point rate cut right now. Only a 1.5% chance of a 25 basis point. That's the way the swaps are pricing things in. And there's really that widespread belief that they will cut rates here earlier. So we are going to see some services PMI data and the ISM services PMI that will make some kind of meaningful impact on some of these markets. But I really think that any kind of recovery that we would see in the market based upon one or two economic data points, and I don't even know which way they would need to come in order to spark that kind of recovery, is probably going to be looked at as an opportunity for traders to continue to lighten up in their positions. So getting into the gold and silver market, gold, it got over 2,500 on Friday, settled below there, but never really sparked that buy, that breakout buy that a lot of people were looking for in this reversal here, in this unwind. It's kind of a bearish megaphone pattern. We're getting larger and closing in the red, larger ranges of volatility and closing at deeper levels lower. So your critical support, I believe, on the gold market is going to be right around 24.45, where we're at about right now, down to about 24.20, which would be the 50-day moving average. Below that's 23.96. What would do that to the gold market? Really them holding these interest rates higher for longer, and just liquidation occurring in other outside markets that drag down these types of futures. Getting into the silver market, that's another market that looked like it was trying to stage a recovery and then breaking, and it was really this break below the $28 level that's just quite alarming. And then also the continuation down through 27.50, and now breaking down 27.19 last. It looks like futures are going to push all the way down to that 200-day moving average, which is 26.56, and we'll see if that type of level there, the cure for lower prices, is the lower prices, whether or not traders step in and look at this as a long-term bargain hunting opportunity. So you got any questions? Be here all day here, back in Florida, back at the office, getting settled back in, but not the way I wanted to see this Monday morning start off here. So, cooler heads will prevail in this, and this is where position sizing becomes paramount if you are going to trade the futures markets, or any market, as in that case here with this sell-off. But you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss, may not be suitable to all investors. Good luck, good trading.